Ladies and gentlemen of the crypto space, we are live, and it is Friday, August 7th. Yes, the end of the week, the end of another week at 12 p.m. Eastern Time. Best part of my day, we get to talk about stuff that actually matters in this world. That's what's important, not the other stuff. What does the other stuff matter? The stuff that we talk about is the future, where things are heading, why things are going to change, the craziness that's going on out there. The stuff that's important is what we talk about on this show. Who's in the chat right away? Digibite or Just Nibble in the house. Let's roll. Yes. As folks roll in the door, I started a little bit early today. The title of this video wasn't what I have up right now. What I have up right now is Global Interoperability, BSN, IrisNet and IRITA. Sure, I wanted to talk about that, but this was more so supposed to be an AMA. So folks, throw out questions, get it in the feed. Let's talk about anything on your mind. This is what was on my mind. Argo Glass, let's run it. Yes. All right, let's flip it over to the main screen. There was a couple of interesting things floating around this morning. Where was it? So a Donald Trump post back in August 7th, 2012, talking about stimulus, and we can't keep doing stimulus. And we did a $600 billion Treasury print and a $6 trillion Fed stimulus, and now we're about to do another $1 trillion Fed stimulus. These boys are out of their mind. Captain's in the house. Always a pleasure. These boys are crazy. I mean, look at this. I mean, gold is crazy. It was up in like 2070, 2062. There's no perfect answer of what to do with funds, what to do with capital, what to do with savings. But man, what they're doing with the I don't even have the CNBC up. I haven't even watched the news, like television news, in a while. I don't even know what's going on out there. But the point is, everything about it makes me not want to participate in that financial system at all. Like, I'm working for money. I'm like, oh my God, I got to get my money out of this paper garbage, because it is just it's not just, what's the sentiment? The sentiment is not just distaste because I want more. It's not about the sentiment that I have, the distaste that I have for the legacy financial system isn't because of greed, isn't because I wasn't as successful maybe as I wanted to be, even though I've been quite successful in dollar-denominated terms. It's just that from a technology standpoint, it's not even technology. There is no technology. The legacy financial system is like, it's not even gears. It's literally paper and filing cabinets. It's so pathetic. And that's like a politically correct use of the word. It's a pathetic system that should be just, why is it not dead? Like, how is it still alive? Like, why are they still using it? And that's how frustrating it is to even contemplate the legacy financial system in these dollar paper bills. Like, oh, that's some cool technology you came up with there, Federal Reserve and Treasury. We're going to print some paper and put some numbers on it. Oh, yeah, you're so smart, Benucci Bucci and Powell. Oh, we're going to print paper money. Oh, get rid of it. Make something new already. Oh, my God. We've had computers for 20 years. We've had blockchain for 11 years. Do something besides fucking it up. All right, that was a rant. That was a straight up rant, but I expressed myself. I got it off my chest. What's going on in the chat? My 12-year-old will be buying milk for $30 a gallon. Yeah, man. Dude. Bear in mind, it's all going to inflate, so our salaries, I mean, in theory, will inflate, or at least look at gold. Gold is $2,030. The dollar, well, it pulled up a little bit, but it's pushing lower. Now we'll see what happens. I mean, Raul and Brent. And then, frankly, there's plenty of reasons why this thing could just go straight up. But this is what the Fed and Treasury are trying to do. They're trying to push it down, because trying to push it down makes it cheap. Makes the dollar cheap compared to other currencies. Other currencies can buy more dollars, which means other currencies are more powerful when they want to do some shit in the U.S. So that means they could do things like factories and build stuff and buy stuff, and that brings activity here. And to top it off, the reason the Fed and the Treasury want to cause inflation is because there's over $250 billion worth of debt out there that's imploding. So the only way you can counter a debt implosion is with inflation. But the problem is the people that are out of the system, that are out of the equities markets, that have nothing in gold, nothing of cryptocurrencies. Almost no one knows anything of cryptocurrencies. The people that are out of that are just in fiat are the people screwed by inflation. I guarantee you, everyone in this channel knows a person that knows nothing other than dollars. They go to work, they get a paycheck, they have dollars in a bank account, they probably live paycheck to paycheck, and those are the people that are hurt the most by inflation because their dollars, the purchasing power is continuously destroyed by inflation. And all you have to do is tell them about the Chapwood index. If you want to try and get through them, they have any dollars saved whatsoever. Like this is just they're it's not that they're screwed in like 5 years or 10 years. They're screwed next year. I mean everything's going to cost 10% more, and this 5 year average and the last data point is from the first half of 2019. This isn't even including what happened in 2020 thus far. I mean, what are you going to say? 20, 30%? Everything's going to cost 30%? All I know is my house insurance went from 5 grand to 7,500. And that was a 50% increase year over year. And that was my recent bill that I just got this year. So 50% increase. We're talking 30, 40, 50% increases we're going to see due to inflation next year. And that's just shooting from the hip. I don't know, maybe less, maybe more, depending on your region. But this isn't even fair. It's not even funny. It's disappointing. It's frustrating. And someone's got to yell about it. Ah! So I'm going to yell about it. Kel says the last Bitcoin all bull run was basically a month before this 2017, November, December. Could the DeFi bull run so I don't know. I don't have a big sense about a slowdown, but it in theory I have seen a bit of a slowdown, I guess. So let's take a look at the charts. Let's reset. So this is a bit of a slowdown. How funny is that? Seeing 15% as your top gainer for the day is a slowdown. Oh, take that, equities and your garbage paper. It's 15%. So it's good to see Aave taking a bump up, but I think it's on a bearish pattern. I mean, clearly this is horrible. This is Ripple. It's just a horrible chart. I wouldn't buy this. It's dangerous. Bear in mind, there's an entry. There is an entry on Ripple, and it's here. The only time I would buy Ripple at all is somewhere around. I would want to get through this resistance, 333 sats, which is what a 30 to 40% gain from where we are. But it's not going to hit it. It's already overbought in the Stoke, so this is going to bounce down. This firmly hit resistance on the weekly and is getting rejected. So this will bounce down. So, it will bounce down. It's overbought. It's going to bounce down. So you don't buy it now. You buy it when it goes, you see the mouse, you buy it when it goes up here, and then it bounces down to the previous resistance, and then it bounces up, which means you have a confirmation of a bottom. A resistance turns support. So you have a limit or a cap to the downside, or at least a metric to gauge yourself with. Like, oh, if it goes down 10% below that, I hit a stop loss. So as of right now, there's no floor. This thing could just plummet. It's just too dangerous and risky to play in that space. I wanted to look up. Oh my God, I totally got distracted. Oh, I was going to look up Len real quick. Let's do this. Because Len just is up so much. That's way too short a time frame. Let's look at the 4-hour. Okay, yeah, it's bearish. I mean, look, you're printing a higher high, so that's the current run, as you see here, with 16%. But I mean, maybe you could say this was a sim triangle. I don't know. It's just too short a time frame, really, and the pattern isn't clear. So I don't my recommendation is to not play something unless you have a very strong trend confirmation, a local trend. And this isn't clearly a symmetrical triangle, as you can see here. It's not clear. I mean, there is deviations. I mean, look at that. I don't know. What are you going to print it like this? So this is non-conformatory to something that is relatively predictable. And that's the whole point of these trends, is something you're attempting to take pricing, which is, random and sentimental and all those human terminologies, and you're trying to apply conformity to it to get based on historic precedent, based on trends and tendencies. This is likely how it's going to play out. And when you're outside that realm of formation, you have unpredictability. And how the heck can you invest without predictability? I mean, there's no assured predictability, but the point is the more data you have, the better the chances are your bet is correct. And that puts the odds a little bit in your favor. Interesting. Interesting. Outsap, you're welcome. It's my pleasure. Charlie's in the house. Check, check, 1, 2. Uh, Argo says we are in a system that was always based on fraud. Everything right down to the very grammar we use to make contracts. Yeah, man, it's horrible. I don't have anything good to say about our status quo system. All I know is when I bought my home in Florida, there was this tax agency, so it wasn't like lawyers in New York, but the tax agency is a company, and their whole purpose is to facilitate the title transfer and the escrow. And all I know is this entire company is going to be gone in 5 years. Because it's all smart contracts. Why? No one's going to be paying people and human resources and companies to do this anymore. You're going to pay couple of engineers to write some smart contracts that automate the entire process. So the next 5 to 10 years, the 2020s, are going to be one heck of a decade of change. Incredible, because it's inevitable. Because the status quo, the legacy system, is so pathetic. It will change because it will save companies money. It will save money. And what is money? So I don't know. What's the point? Garbage paper money. When I say save money, I'm talking garbage paper money, and it's garbage. So what's the point of saving it? I don't know. Save gold. It'll save gold. I don't know. That doesn't make much sense. My day life is based on the euro. See, so the euro's going up right now. Woo, woo. So complicated. BNT, BNT. Re-entry was down here at the tip of the falling wedge. Um, I was thinking it was going to pull back more because the 200 EMA was a little further down, but I don't think it's going to hit it. I don't think we're going to go that far down, at least right now, because we are totally oversold on the 4 hour, on the daily. Ugh. So the charts are highly inflated from where they were. These things are up hundreds of a percent. So in the long-term trends, this thing could easily pull back 50% and still be relatively bullish. That's how that's how volatile these charts have been. They've just gone straight up. So you could pull back to here, 10,547, and still be above the 200 EMA. Oh, but on the 15-minute, it looks like we have a good bullish breakout from the falling wedge. It's not a rocket ship to the moon, but it is an upward trend consistent with the slope of the 200 EMA, which is trending upwards. So this is a good sign. And look, so you were red means the guppy averages, which are some very short time frame averages, are trending downward, but then it turns gray, which means they're horizontal. So, if we get a nice green rip, that would make sense. I mean, look back here. Red, gray, green rip. So if we see a nice little fractal, so to speak, right here, you see the mousy, and then gray, and then a green rip, red, gray, green rip, that would be really nice to see. And frankly, we saw it back here, red, gray, green rip. And that tends to be the pattern. You have some downward action, you have stabilization, then you have a green rip. So we had a green rip. A little bit of sideways action with the gray, but then our downward action, our stabilization, and then the green rip. And you got to remember the reason why it goes from red to gray to green is because the prevailing trend. And the prevailing trend for these assets is bullish. And why is the prevailing trend bullish? Because of the macro narrative that we talk about. Liquidity providers competing, disrupting the legacy financial system. And that is the macro trend, making these assets and projects bullish. So when you have a symmetric triangle, it's going to break to the upside. Albeit Kyber, so check it out. So on the daily, Kyber never turned bearish. It pulled back large, a 40.39% pullback, and it's trading horizontally. What a bull run. So I think it's going to go up, and I should be probably sized a little bit more conservatively, but we'll see. I hope I don't lose anything. But here, check it out. On the 1 hour, if we have 21 hours until the end of the symmetric triangle, this was a fake out about an hour or two ago. It ripped to the upside and pulled right back down to the downside, right back into the local trend. And, I'm inclined to think, let's pull out to the 4 hour, that this is going to rip to the upside. I mean, this support is crazy. You look at this orange line of support, because this orange line of support goes all the way back to 2018. Because look at this. Look at this rip down. There's a bounce right off support. And then a rip up and a rip down. It bounced off support and broke support. That's crazy. This orange line has some serious history on it. And that is exactly why we held so firmly on it. 1, 2, 3, 4, 5 times on that orange line of support. Now, you may say, as we've said a couple of times, that we're drawing lines on a graph. But look at this line. Look at this line. This line, the trend bounced off it. This isn't fake. This isn't a drawing on a graph and miraculously meaning something. It did bounce off this line for reasons of sentiment and psychology and history and precedence and all these well-established topics that are discussed about technical analysis. All right, I'm missing people in the chat. What do we got? What do we got? So reentry, BNT reentry. The reentry was probably about here. So reentry was I did grab a position down there. Price range. So reentry was did it rip down? No. It's about 5%. 5% ago, give or take. Oh no, this is Kyber. I'm sorry. Reentry on BNT. Listen, depending on your risk tolerance, I think now is a good time. Optimal reentry would have been right around here where red turned horizontal. Bear in mind, short term. Let's look at the longer term. Short term's a waste of time. So the 4 hour is way oversold, and the daily is overbought. So this thing could pull back, but this thing could do another rip up. That's probably where we're at with Bancor, is that we're finding a top. We're going to find a local top. It's going to run out of steam, and that's where the daily is going to have to start pulling back. Bear in mind, like the 4 hour could totally rip big because of news, and news could overwhelm the longer term trend, and that's what could play out. But that longer term trend is going to come back and bite us at some point because that's the way the charts and the data work. What do we got? What do we got? Am says, can you please briefly describe the process of launching a Run Dark node? You grab the dark, was it the dark node, the CLI tools, and then you have to set up. I go with AWS. You set up an AWS account. You're gonna all the tutorials are on their documentation. Very thorough. You set up an AWS account. You're gonna set up some usernames, some credentials, and then basically it's like one line of code. You download the CLI. Here, check it out. New window. So, uh, dark node. So here's the dark node utils. So dark node list. Here's the dark nodes. There's the addresses, the IDs, the IP addresses, and this is how you manage it. Here's the literally up, dark node up. So here's your dark node up command. You're gonna give a name. There's the two most important things. You give your keys, and this is the user name and credentials that you create with the AWS account. You set up the access and the secret, and then that's what's pertinent with regard to AWS, and then DigitalOcean's another story. I think AWS makes more sense, at least from my perspective. And that this will allow you. So it's a name, the credentials, and that's about it. And then the command line utils automatically will deploy the dark node, download all the files, deploy the server, configure all the instances that is needed on AWS. It's all completely automated. And then you'll go to it'll open automatically to here. The completion of the installation will give you a giant green URL which will open to the browser, and literally you configure everything graphically in the browser. So here, 1221. Take a second. So red dark node. Okay, so I have my MetaMask set up. I connect my MetaMask, and here's my 3 dark nodes. So it's literally configured here. You'll get a button that says register. You'll pay with your MetaMask, which can be vis-a-vis your ledger, and that's the process. Rinse, repeat 3 times, and this bad boy's churning out $121 million all time. That's crazy. I mean, check it out, $121 million of traffic, of volume, and this one dark node has 62 60 94. So it's, let's say 100. So $121 million, and the dark node has $100. So if it had $1 billion, that's $1,000. And if it had $1 billion a day, that's $1,000 a day. 3 dark nodes, $3,000 a day. That'd be nice. Come on, baby. Come on, Ren. $1 billion a day, baby. You're talking $200 billion market cap. Let's look at the market cap. Let's look at the market caps. $214 billion on Bitcoin. Come on, Daddy wants to retire. I want to do different things. I want to get on YouTube. I want to talk. I want to write. I want to program. I want to do things that are actually meaningful. So cool. $1 billion a day, and it's not even just Bitcoin. It just needs $1 billion in and out, mint and burn of RenVM, which would be less than 0.5% of the Bitcoin market cap, and Ren Dark Nodes currently will produce approximately $1,000 a day. Fascinating. Oh, I can still hope. We'll see what happens. So AM, that's the deal. Captain Weber says Ren chart now shows a pullback. I want a dark node 50% pullback would do it. Yeah, I know. Hey, listen, I don't know what to say in some regards with regard to investments. This is not easy because look, I got in at about 6 grand a dark node, and now they're clearly like 24 grand. So the captain says 12 grand. That sounds good. You know, it's here's the thing. You can't trust the current price of an asset. Meaning, I have a lot of safety. I bought at 6. It's at 24. It could lose 50% of its value, and I haven't lost a dollar. It could lose 75% of its value, and I still haven't lost a dollar. But if you buy at 24 and it loses 50% and you lose 12 grand, ooh, that hurts. That reminds me of 2017 pain. So I don't know how. I can't tell anyone entries. I can't tell anyone. Everyone has to do their own experience and do this stuff for themselves, and there's no answers, and there's no math and science to what to do. A lot of this is art and instinct and gut instinct, you know, deep inside gut instinct. My man. Uh, I hope it pulls back for you as well. I do. Lucky says number one on node questions. My man. Plus one on node question. Yes. Ask anything on your mind, guys. Happy to help. You answered earlier today on Twitter, but care to say something about Celsius? No, Celsius is cool. Celsius is like BlockFi. Celsius and BlockFi are DeFi, except centralized. They're CeFi. But the point is they're over collateralized lending protocols. So if that takes all the risk and places it on the borrower. For someone to borrow from Celsius or BlockFi, they're putting down 150% of how much they want to borrow. And the reason they're doing this is because they're attaining a leverage position. So they put down, let's say, 2 Bitcoin, and they're taking a half a Bitcoin on borrow for the loan. And now they have 2 Bitcoin that BlockFi is currently holding, and they have .5 Bitcoin that they could do something with. Maybe they do a 10 to 1 perpetual swap, 10 to 1 leverage, where they do something with it. But the point is now they have two that they put into custody as collateral for the loan, and they have .5 to play around with. So yeah, it's not under collateralized loans like a mortgage where someone's broke, they barely have any money, and they're getting $500,000 for a house. But this is more of a safe leveraging loan type of solution where people aren't getting into trouble. There is no, when there's liquidation or someone can't pay back the loan, if someone can't pay back that .5 Bitcoin loan, then BlockFi is going to be like, all right, not a problem. We're going to liquidate your collateral. We'll give you back the difference. We'll take the .5 Bitcoin that you owe us plus interest, take it out of your 2 Bitcoin, and we'll give you back the difference. So that's what's so brilliant about over collateralized lending is that it's responsible. That's responsible lending, not under collateralized, which is irresponsible, over leveraged lending. I mean, there's reason for trustworthiness and to substantiate an under-collateralized debt position. But frankly, not from Equifax, Experian, or whatever garbage network is assessing someone's credit. More like Teller, Teller Finance crypto project that is going to assess a person's credit worthiness and contribute to potential under collateralized debt positions. Now, that's not out of the question, but for me, over collateralized debt positions is the safe way. That's the responsible way to borrow and lend money. Is the legacy financial system going to do anything of the sort? Nope, because they're irresponsible and they're a bunch of schmucks. Do you see ThorChain as a competitor to Ren? No, ThorChain is on Binance Chain, which is there's no Binance Chain in the U.S. It's completely blocked. Well, bear in mind, maybe I say that because of Florida and New York, but Binance U.S. is off the grid in Florida and New York. I can't touch it. But you need what BUSD, and then you could go on Binance Dex to get. I don't know. I can't. I don't know anything about it. I can't invest in it. It's completely off my radar. I can't own it, and I don't know. I don't know anything about it. Same thing with Matic. I can't own it. Anything Binance does, I can't do anything with in Florida or New York or the other states in this country that has their head up their ass and has this regulation that's ass backwards. Brian Brooks is going to fix this shit. And I'm not saying that because I hope or want him to, but he wants to. He is the chairman of the Office of the Comptroller of the Currency, and he wants to fix this problem because it is a problem that different states have different policies, and there's no national banking charter, no national rules that all these companies can play by, like these crypto debit cards. So there's one rule. A nice uniform set of rules. There's these stupid rules in New York, and then 40 out of the 50 states could do whatever they want with crypto, and one state, New York, can't do jack shit. So what kind of system is that? Absolutely ridiculous. It's a hot mess. What else is going on? I really didn't get to any of my hot topics today. Oh, so guess what? The topic, the title that of the today's talk was this, but obviously we turned it into more of an AMA. I like the AMAs, but guess what? I'm talking with Jared Tate from Digibyte on Monday. We're going to have no live stream, so I'm going to record it. I'm going to use Zoom. That's Zoom tech, and I really look forward to asking him about China because he lived there, and he'll have a lot of opinions about chapwood and inflation and the government printing and the stimulus and how pathetic the legacy financial system is, and most importantly, the BSN and IrisNet and IRITA about this tech that I find absolutely so fascinating. And frankly, what I find what the Chinese are doing with regard to the BSN absolutely incredible. Maybe it's because it is making the U.S. look pathetic, that we could barely do anything. We have actual government politicians that are fighting blockchain. Are they malfunctioning? Do they need to be like, sir, you could step aside and let someone smart do your job instead, please, because this is what China's doing. They're rolling out tech, and we could barely decide if we even want to talk about it. Anyway, yeah, this is going to be a good one on Monday. I look forward to it. Digi. So the reason I love DigiBuy is because it fits into the big picture. Now, it's not the hot topic right now, but it has a perfect role. And I'll talk about that on Monday because I'll always loop in Digibyte. And I've talked about Digibyte obviously on the show before. Digibyte is an entrenched public utility that has critical mass decentralization, which means it will exist in perpetuity, which means there's no time limit, which means anything is possible. And its core functionality is uh, record management, record storage, and asset management. So, okay, so it's just going to take some time. The target market for disruption is massive, but it obviously has a critical role in the big picture that I see, that I talk about, and I will continue to talk about. Anyway, we're going to wrap it up. I look forward to getting that video out Monday. We're going to have another live stream on Tuesday and keep the party rolling because that's what we do. I love each and every one of these episodes that we get to spend time together. It is 12:32 on a Friday, August 7th. I thank you, everyone, for joining me. It's always a pleasure. I will see you next time. Peace.